let's get started. So last time we looked at we were trying to look at how to prepare ledgers and the accounting equation, and showing how each transaction affects the accounting equation. And we went through this question that I'm just trying to display here. And we were able to show how the accounting equation is affected for each. This is the accounting equation, which is assets is equal to liabilities plus equity. We did that for all the transactions. And what we ended with here, we say that sometimes the accounting equation can be used to prepare the balance sheet. The accounting equation can be used to prepare the last accounting equation will definitely give you the balance sheet of the company. You get it? And that is why sometimes companies take this approach. You get it? So your last accounting equation that demonstrates how all your transactions are affected by the accounting equation transforms into itself as a balance sheet. You get it? Huh? Yeah, so it's very important for us to have that. And then we did ledgers. We also did ledgers for each of the transactions we have at hand. You get it? Huh? So it's very important for us to have that in mind. Now, today we want to interest ourselves onto something different. And that is, of course, from ledgers too. We want to see how do we transform, how do we get items from our ledgers to the trial balance and then to the financial statement. Now, for matters of time, what I want to do is I'm going to use the same question that we used last time for you to follow through. Now, if you miss this class, then it would be important for you to see how you can access this class, the recording. So this was our capital account. There was nothing that really changed along the way there. And remember, we were preparing something for, I think for, was it October? The transactions we are trying to prepare were for transactions for October. So that is what we're trying to prepare. So in this case, what you do, of course, when you're balancing off your ledgers, we know very well that you look at this side and you also look at this side. And then the side that has a higher will have a balance brought down, and the side that has the lower will have a balance carried down. So for example, in this case, our balance carried down, was still 120,000, which was the difference. You get it, huh? So it's very important. So then you get your total. I'll use some Excel formulas since I'm using Excel. So you get your totals there. Okay. So once you have your totals, then you have your balance. Your balance brought down. Now we said that okay, that balance can also be balance brought forward. You get it, huh? So it shouldn't confuse you. We say that always this balance brought down also demonstrates the normal balance for this account. You get it, huh? Like the way we know very well that when it comes to capital, when capital is increasing, it is credited. So even the normal balance for capital should be on the credit. So if you're balancing off and you see this on the debit, it should give you an alarm. You get it? We only have few accounts that keep on changing. Accounts like bank, you get it. I think it's for now it could be bank, maybe or retained earnings can also have such a way of things. But basically, it's for other accounts like capital, cash, and so on. All those have a standard balance. You get it? And their standard balance is this. Where you see increasing, the standard balance, the normal balance for assets is a debit. Any asset will have a debit balance. If it has a credit balance, it is something totally different. You get it? The same thing with liability. Liabilities have a normal credit balance. You get it? So it's important for you to have that in mind. All right. So I was just trying to balance off this. So this is what we have. Now, if I'm drawing up my trial balance, let me just try to put here my trial balance. If this is my trial balance, now, of course, the trial balance will also have, it has a title. So this business was, this was iBeauty Salon and Services. It's no longer Roberto. Roberto is the one who started the business. So this is iBeauty Salon. So iBeauty Salon, trial balance, as at 31st October. Yeah, just like that. So just a simple heading there. Now, trial balance will always have, of course, it has the detail, or this can be account or account detail, and then it will have a debit, and then to have a credit. Have a debit and it will have a credit. Okay, so after I've balanced off my capital and my balance brought down is on this side, what I'll do, I'll just come here and write capital. I write capital and put 120,000 on the credit side. Wherever there is a balance brought down, that is what feeds into your trial balance. You get it, eh? So it's very important for us to have that in mind. And then I'll come here, I'll balance off my cash. I hope this was all of it, but it's for our learning purposes. So my cash, this is what is happening. I'm going to first test and see which side is higher than the other. So I'm going to test this one, has 133. And I'll test this one as well. This one has 63. So here the debit side is more than the credit side. Remember, this is your debit side. This is always your credit side. So here it is more than. You get it, huh? Since this is Excel, I'll even want to add more space a little. Okay, so I can balance off rightly. So what is going to happen, since this side I have now, this you have to test it on your calculator. You don't have to write it there, because if you're writing it with a pen, you may not have how to remove it. So since that is the case, now what I'll just do, I'll just try to find the difference. What is the difference between the two sides? So it is 69,720. So this 69,720 is actually going to be my balance. So what I'm going to have here, I'm going to come here. Now, in most cases, of course, those balances have the last date of the month. You get it. You may put it there. You may not really put it there, but you balance off at the end of the month. So we have our balance carried down of 69,720. You get it. And once we have that, each of these sides will now balance off by 133, like that. So that is what we shall have. And since we've put here balance carried down, we'll come here and put a balance brought down. Now, in most cases, this balance brought down is in the next financial year. It's 1st November. Okay, next period. If it was financial year, then that would be next financial year. But if it's next month, it will be the next month after October. So this will be 1st of November, like that. So I'll put here my balance, the difference, which was 69,720. So as it is here, it is here. So what I'll come to my trial balance and put cash. I'll put cash. From the ledgers here, I'll come, since my balance brought down is on this side, remember we picked the balance brought down. This is the balance that we pick. Just like the way we picked this 120 here. So I'll go on to pick this, and it's what I'll take to my trial balance. And remember, this is on the debit side. So in my trial balance, I'll include it here. It is 69,720, 69,720, like that. So that is how I'll have it right there. Now, I'll move to the next account that is near here. I have rent. So rent, what I'll do, I'll get my balance carried down of the same value, trade of 800, trade of 800, balance off. So here I have trade of 800, and here I also have trade of 800. So then I'll have my balance brought down, of the same value, like that. You get it, huh? Yeah, that is what I basically do have. Remember, this is my debit, this is my credit. These are some of the things that I add even at the last moment when I remember. Anything I remember, I add. So I'll pick this rent and put it on the debit side of my trial balance. So my rent will be here. I have trade of 800, like that. So that is what I'll have. That is how it will be within my trial balance. As you can see, cash is an asset. So its normal balance is on the debit. And that is the same thing that is here in my double entry. I'll call this the double entry. Assets have a normal debit balance, and that is why you see cash has a debit balance here. The same thing with rent. Rent is an expense. And remember, expenses, we say they have a normal debit balance. Now, definitely as you proceed with accounting, even for financial accounting, in most cases, they will give you the trial balance. In most cases, there will be few cases where maybe they will bring transactions and you have to do a trial balance and then go ahead to draw financial statements. So we are learning here to understand where does this whole trial balance come from, because we have cases where we have errors in the trial balance. So unless you understand where this all comes from, then you cannot be able to rectify those errors. I hope we are together. So it's very important for us to take good note of that. So once I'm very happy about my rent account, I'll now move to the next account that is right near here. These were beauty supplies, just like the way you can have inventory. So this one, I'll just, this is a column for debt. So I'll just start from here. Yeah, you can include the debt. 31st October. Remember, this is your balance carried down. And how much? 20,000. And then you have your total. You have that. Then on 1st November, you have your balance brought down of the same amount. When I go to here, I just pick my beauty supplies account, write it there. How much is the amount? 20,000, and it is on the debit side. I'll write it there like that. You get it, huh? So it's important for us to understand that. Then I'll move to fixtures and fittings. Same story. This is 31st October. This is balance carried down. This is 48,000. I'll put my totals. Same amount. Then here, 1st of November, I'll have my balance brought down of 48,000, like that. So when I come here, I'll write fixtures and fittings, just copy here. How much is the amount? 48,000, still on the debit side. Fixtures and fittings. Beauty supply, of course, this is, let me remove the word account. Beauty supplies, this is like stock. So that is why it has a debit balance. It's like inventory. Inventory is a current asset. Fixtures and fittings, as you can see, it has 48,000. It's also a non-current asset. All right. Just carry that. Then I come to wellness and supplies. Wellness supplies. This was a creditor who gave us these fixtures and fittings. We didn't pay them by the end of the period. So 31st, that balance, if you're in class and you already have this, you should be balancing off even before I can balance off so that we can finish together. So we have 48. Now it's good for you to do this when we are studying together. So you don't just observe, but you're part of. So, okay. So that is the total of each side, but then we shall have on 1st November, we shall have a balance brought down of 48. Remember, this was balance carried down. So that value, I'll transfer it to that value, I'll transfer it into my trial balance. I'll transfer it into my trial balance. Wellness. Just a moment. Wellness supplies. This is 48. Now this will have a credit balance, and this is a liability. And remember, on our double entry, when liabilities are increasing, we credit them. So even their normal balance in the trial balance, there will be a credit. So it's important for us to have that in mind. And then I'll move to my wages. I'll have, this is 31st. This is balance carried down. This is 7K, 7,000. I'll get my totals. I'll put 7,000 here. 7,000. And then on 1st November, I'll have my balance brought down of same value, 7,000. So when I come here, wages, I put my 7,000. Okay. And then neighbor account here is bank. Bank, 31st October, balance carried down. This is 13,000. Total here. Total there. Like that. Come here, write bank, 13,000. Come here, revenue. Revenue. This is 13,000. It is 31st October. Balance carried down, 13,000. 13,000 total. And then I'll have 1st November. I'll have my balance. Sometimes we write it BAL, we write BAL in short. Brought down, it's the same thing, 13,000. So this is 13,000, but on the credit side. Okay. Then there's a neighbor account here. I didn't write a balance here. 1st November. Balance 13,000. Wellness have balanced it off. Drawings 31st October. Okay, this one is charming. Okay, this is balance carried down. How much? 6,000. So it means that your total will still be 6K. Still be 6,000. And on 1st November, your balance brought down will still be 6,000. So come here, say drawings. Remember, it has a debit balance. I'll put 6,000 here. Okay. Then fittings, light fittings, light fittings. Yeah, so when you balance off this light fitting, like the way we've just been doing here, sorry, this is 10. This will be balance carried down to 800. And we shall have our balance brought down of 2,800. So lighting and fitting is 2,800 on the debit side. And then, okay, there is nothing there else. Okay, okay. Then lastly, we have electricity and gas. When you balance off this, you should be able to get a debit side of 1680. Should be able to get a debit side of 1680. Now, unless there is something that I've left out, maybe that we didn't do recording, but my trial balance should be able to balance. So once you've done everything, your trial balance has a total. You know, it is called a trial balance. So you have to make sure that the sum of all these transactions here matches the sum of these transactions here. So you can see the total of this column is 181. Maybe you can use your calculator. I just used Excel here. And the total here is also the same. Now, in this case, you count yourself that you've been able to calculate and have your trial balance rightly there. You get it. Now, from here, you can proceed to go and prepare your financial statements. You can proceed to prepare your financial statements. But what if our trial balance had a less figure? Let me assume that I'm going to make some adjustments here. Let me assume this was 88, and let's say this was 26, like that. So once you have your trial balance with such cases, then it means that there are some errors that you've done. There are some errors that you've done along the way. And those errors could be one in the way you've been adding up, the way we've been adding up this, maybe you pressed your calculator wrongly. Those errors could also be maybe the way you picked this value. For example, this could be 120, but you rather took a different figure. Maybe you took 20,000 instead. You get it. And now that gets us into what we call correction of errors. It gets us to what we call correction of errors. correction of errors. Now, this correction of errors, these errors, we have errors into two categories. We have errors that affect the trial balance. And then we have category 2 are errors that don't affect the trial balance. You get it? So we have those two cases. Now, why are we bringing errors here? Because you want to make sure that by the time you prepare your financial statements, you are error-free. Remember, your financial statements should be able to demonstrate a true and fair view of your financial operations. So if you have your trial balance not balancing here, this is a first signal for you. This should be a first signal for you to know that there is something that is not right. You get it? It's a first signal for you to know there is something that is not right. Now, errors that don't affect the trial balance, errors that don't affect the trial balance. Let me just try to put this back. So you can see here, our trial balance was balancing. The question would be, is it a confirmation that if our trial balance balances, we don't have any error? I want to say that no. Even if your trial balance balances, there could be some errors that you have made along the way. But those errors do not affect the balancing of your trial balance. Those errors don't affect the balancing of the trial balance. And I'll give you some examples. And those are the errors that don't affect. Now, one of the errors that we have here is called the error of principle. The error of principle. The error of principle. Now, the error of principle, for it, it is an error to do with any interchange between, let's say, an asset and expense. An asset and expense. You get it? So we are going to see how that plays. Now, within, I have some explanation here. Yeah, I'll just demonstrate slowly. So the error of principle is basically where you're entering in the wrong account. For example, instead of entering in an asset account, you enter into the expense account, but you maintain the right side. If it's something that was supposed to be debited, it was you went ahead to debit it, but rather than debiting it in one account, you debited it in a wrong account. You get it? Huh? I'll give you an example from our question here that we are looking at. Maybe it would make more sense for you. Okay, this is how the error of commission would be. Right here. Now, bought light fitting for UJEX 2,800 from local artist and paid cash. Now, such a transaction, remember, we have a new lighting light fitting, this is an asset. You get it? This is an asset. But because of an error of principle, the accountant can go ahead to expense this and maybe put it under office supplies or include it under wages, whatever it is. So what will happen in reality, when it comes to your double entry, what will happen for the error of principle? Remember, this is what we did for that transaction, for the light fitting. We came and debited here and went into cash and credited. That is what we did. But this person will come and credit here, do the right thing. And instead of putting it under light fitting here, they can go ahead to put it under, say, rent, and put it under rent here. So ideally, they have put it on the right side. They have put it on the debit side, because even if it was being put under light fitting, it would still be on the debit side. So when you transfer it to the trial balance will not be able to detect that error. The trial balance only detects errors that create a mismatch between the debit and the credit. You get it? So that is what happens with the error of principle. You get it? Eh? You read more about it and maybe understand. Then we have another that we have is error of commission. Error of commission. We have error of commission. Now, error of commission is to do with interchange in names. Is to do with interchange in names. And how can the error of commission be? For example, you see this, we bought fixtures and fittings from Wellness Supplies. You get it? Now you can have a situation where you have two suppliers with the same names. You have Wellness Supplies, and then you have another supplier who is called Wellness Industries. You get it? So these are totally different companies. I think, you know, in Uganda, you can have several companies named with similar names. So because you just took the word wellness, you end up choosing Wellness Industries instead of Wellness Supplies. Now, in that case, that would be an error of commission. It will be an error of commission. So it means that when it comes to you recording your ledgers, you go ahead, since it was fixtures and fittings, you do the right thing here. You put the 48,000 here in the fixtures and fittings account. But when you come to, instead of putting this transaction here, you might have another account that is called Wellness Industries. So you put it under Wellness Industries, but on the credit side. Now, such a transaction, when you make such an error, it will not be detected by the trial balance. You get it? So it's good for you to know that. You get it? Then we have, we can also have an error of omission. We can have what we regard to as an error of, can call it total omission. Can have an error of omission. Sorry, this is single M. An error of omission, total omission. Now, what happens with an error of total omission? Let me just show you something small here. Now, in case we had part of our transactions here, for example, in case we had missed out this transaction of 22nd of paid wages, 3,000. If we missed out this transaction of paid wages, 3,000, we know what will happen in our transactions. Remember that wages is 3,000. It means that we shall not have this. This will not be there. And maybe this will now become 4,000. This will also become 4,000. This will also become 4,000. And this will also become 4,000. Now, even in the cash, since those drawings are not there, we shall also not have these drawings. We shall not have these drawings, and it will totally change our things. It means our balance brought down here will instead of being 69, will rather have to be 72, to be 72. So even this would also be 72, 720. So if my cash, I transfer 72, 720, that value here, and then also I come to my wages and I transfer 4,000, you're going to see what is going to happen. When you look at the two sides, I'm still having the same totals. You get it? I still have my 181 and also 181 this side. What does that show you? Remember, these figures have errors in them. I've excluded something. Even here, I've excluded something. You get it? But that is what is happening. You understand? So, in this case, this error will not be detected by the trial balance. You get it? And we are calling it an error of total omission or error of omission, where you totally omit a transaction. You get it? So it is important for you to know. Then we have what we call error of complete reversal. Error of complete reversal. We have error of complete reversal. Now, what happens with error of complete reversal or error of complete reversal of entries? Can add the word of entries. What would happen, for example, for our transaction here, for example, for one of our transactions here, I'll give you an example. This one, paid rent for the month of October, 12,800. Remember what we did with this transaction? We went ahead to debit rent. We debited rent because rent is an expense, and we credited cash. We credited cash. Now, what happens with complete reversal is that instead of debiting rent and crediting cash, you go on to debit cash and credit rent. You get it? Debit cash and credit rent. So what will happen within your ledgers here, just to demonstrate to you, where's my rent account? So instead of putting it here, you come and put it on the credit side. So you have this. You come and put it on this side. So it means that even your balance will shift. Your balance will now be on this side. This side we shall have our balance. Our balance carried down of 12,800. I've recorded this transaction on the credit side. You get it? So what is going to happen is once I go to my cash, I'm going to put it on the debit side. So I'm going to go to my cash and pick this rent. You see where I put it? Now, instead of putting it here, I come and put it here. You get it? So if I come and put it here, it has even changed our total. So our new total for this account will now be 145. Definitely, I'll have to get a difference between. Let me just first remove this. I'll first get the difference between this and this. So this is 98320. So this will be my balance. This will now be my balance. So I'll have here this value 98320 as my balance. After balancing off, if rent is this side. Now, if I take this in the trial balance, where there's cash, I put that value. You're going to see that the bottom will not change. So if I put here, then I come to my rent account. I'm only adjusting for that. And then I put rent on the credit side. So rent, instead of being this side, comes here. You get it? So let me test my totals. You see my totals? I totally have totally different totals from what I had, but my trial balance has balanced. But is what I've done here right? Can rent have a credit balance? No. You get it? Can this transaction be right where I come and credit rent and debit my cash? No, because in this case I was paying, no cash was coming in. So I wouldn't say that this is the right thing to do. But this will not be detected by the trial balance. You get it? And that's why we are calling it an error of complete reversal. You get it? And then we have another error that you need to also understand here. It's called compensating error. It is called compensating error. It is called compensating. Sorry, it doesn't have an R. It is called compensating error. Now, this is a situation where you make an error and then you make another error that compensates for the earlier error. You get it? You make an error that compensates for an earlier error. I'm going to give you an example. If this was the question that I was working on, so what I'm going to do, I'm going to use another transaction here. Okay, so these are bank takings. This is my last. Okay, let me actually use the drawings. Let me use drawings. Let me use this transaction, and then also use okay, this and beauty this. Okay, so when I'm recording beauty supplies, I make an error, and instead of recording 20,000, maybe I record 19,000. You get it? So what will happen in my beauty supplies? Where are my beauty supplies? So I'll come here and record 19,000 and record 19,000. So this will also be 19,000. This will also be 19,000. This will also be 19,000. So I record 19,000 here. You get it? Now, what happens is I also, by mistake, once I'm doing, for example, once I'm doing drawings, remember they are saying withdraw drawings. Instead of writing, maybe I counted wrongly. Instead of writing 6,000, I write 5,000. Or I write 7,000. Yeah, I can write 7,000 just since it's all. So instead of this, I may counted wrongly and I write 7,000. So this is what will happen. So this will be 7,000. This will also be 7,000 like that. So compensating error, you've made an error in the drawings account. You've also made an error in the beauty supplies account. Now, what is going to happen here, under your beauty supplies, you're going to have 19,000. You get it? Then under your drawings, you have 7,000 because that is what the error has done. Let's check our trial balance. You see, our trial balance still balances even when we've made that error. Now, in that case, that error cannot be detected by the trial balance. You get it? So it's important for you to understand all these errors, because once we get to how to correct the errors, then it is easier for you to know exactly what you should basically do. You get it? Huh? Yeah, so it's very, very important for you to understand. Now, we also have what we call error of original entry. We have what we call error of original entry. Now, an error is called an error of original entry if it originates from the transaction. Now, the start of the transaction or the start of the accounting process. If you've been following these classes very well, we went through the accounting process. We went through the accounting process, and we said that we start from the source documents. These feed into the books of original entry, or what we call the prime books of prime entry. You get it? Now, if you have, for example, like this question, for example, for this question that we have here, if this is the question you have, for example, if this, okay, I may not use this. Let me use maybe let me use something different. Maybe this one of monthly electricity and gas. Now imagine you had actually paid, instead of maybe the recording, somebody recorded 1680, but maybe this was supposed to be 16800. You get it? And when somebody was picking this transaction from, let's say, the bill from Umeme, or from the invoice, whatever it is, or from the payment voucher you used to pay, if somebody picked this value, instead of picking 1680, they left out a 0. That error will not be detected by the trial balance. You get it? Because, for example, we are preparing the trial balance from this information, but we are not even sure if this information is right in its own. So in case there was an error that was made in capturing this information from the start, then that error will regard to it as an error of original entry. We regard to it as an error of original entry, and it will not be detected by your trial balance. It will not be detected by your trial balance. So these are the errors that don't affect the trial balance. And these errors that don't affect the trial balance will not in any way create a difference between the totals. Now, we have errors that affect the trial balance. If these errors are made, it would mean that our trial balance will have different totals. Maybe this will be like 100, 109, that, and this will be. So such errors, if those errors exist, then these have affected the trial balance. Now, some of the errors that we have here, we have one, we can have arithmetic errors. We can have arithmetic errors. You get it? And I'll just leave this as it is so that we are able to learn through. So you can see our totals are balancing. And they are balancing because we've done our arithmetics rightly. But just in case we didn't add up rightly here, and maybe instead of adding up this to be 145, maybe you're pressing your calculator, you ended up writing maybe 135. You get it? So it would mean that totally the figure that you're taking to the trial balance will totally be different. You get it? So this value under cash will now be different because of an arithmetic error, and any difference on this, let's say now this is 8, will mean that these two things will not balance. You get it? And that's why we call it an arithmetic error. You understand? So it's important for you to know that error as well. And then you can also have an error of single entry. We call it single entry error. Single entry error, or error of single entry. Error of single entry. Now, how the error of single entry would be, I'll give you a demonstration. For example, if it is an error of single entry, for example, if this is the question, now, if you're recording, let me use these wages. So on 15th, we paid wages worth 2,000. And remember the double entry for paying wages, we said we would debit our wages. We debit our wages and credit, debit our wages and credit our cash, which is the mode of payment. Now, when you come here, if that was the case and we didn't record our wages of 2,000, okay, remember we said we debit wages and credit our cash. Now, single entry means you came and debited your wages rightly, but then when you came to cash, you forgot, you didn't bring this transaction here. So ideally, this transaction does not exist in your books in the cash account. So you only recorded that transaction in the wages account. Remember, every transaction, according to accounting principle, the double entry principle, every transaction should have a debit and credit. You get it? So if you only post a debit and forget about the credit, or you don't know what to post, then it will create a difference. You get it? So it can create a difference. You understand? And then you can also have, we call it transposition error, or error of transposition. You can also have an error of transposition. Now, what happens with the error of transposition? I'll give you an example. Do we see this? This is 1680. Now, you transpose the figures by bringing the 8 before 6, and this becomes 1860. You get it? So what you're basically doing is that when it comes to here, you come and write 1860 like that. Yet when you come to here, to your cash, you've recorded 1680. Now you've transposed one of the figures in the account here, in your account of electricity and gas. Now this error will definitely be detected by the trial balance, or it will affect your trial balance. Errors that affect the trial balance are also errors that can be detected by the trial balance. You get it, huh? Once you bring your things here, for example, when you come to electricity and gas, this will be totally different. Maybe now even transferring it here, you transfer it as 1860. And that would mean that your trial balance will still again even get more worse in balancing. You get it? Now, ideally as an accountant, you cannot proceed to prepare your financial statements if at all these two sides are not balancing. This side and this side are not balancing. You cannot proceed to prepare financial statements. You get it? And that's why we are labeling to take you through this. And this is a full topic of correction of errors. You get it? Huh? So it's pretty very important for you to know exactly what do we do. Yeah. So these are some of the errors that affect the trial balance, and these are the errors that don't affect the trial balance. You might come across others in your research, but just for our class matters, it's good for you to know that. Now, once your trial balance fails to balance, as you can see, and you cannot tell that error at that point in time. You know, there are some errors that are hard to determine. You get it? So if you cannot tell that error, the error at that point in time, then we introduce what we regard to as the suspense account. We shall introduce a suspense account. We shall introduce a suspense account. Shall introduce a suspense account, which is a temporary account that is introduced in the trial balance to make sure that it caters for the difference between the two sides. So this suspense account is just a difference between the two totals. Just a moment. 9 that minus that is 9H. So if that was the case, I would introduce my suspense account here like that. You get it? And my totals will now balance. So that is what will basically happen. You get it? So I want us to take a 5-minute break. Okay, let's so we are looking at errors, and I just want to give more clarity on the compensating error as requested. Now, the compensating error, what we are saying is you make an error on one item, or one transaction. Say, let's say maybe you make an error on this error, and by chance you make another error that compensates for the other error that you made. You get it? Like I give you an example where instead of recording 6,000, we recorded 7,000, and then when it also came to this transaction of beauty supplies, we also recorded less. Actually, here we recorded less by 1,000, and here we recorded more by 1,000. So that error here compensates for this. So that is what happens with compensating errors. You get it? So it's good for us to understand. I think you interface, once you interface, we shall see how that appears when we come to examples. You get it? Huh? So it's good for you to understand each of these. So I said if your trial balance is not balancing, the first thing you do is to introduce a suspense account before you even start looking for the errors. The first thing you do is to introduce a suspense account. And the suspense account is the difference between the side that is higher than the other. So you put it as a cushion, you get it. A suspense account by definition, of course, is a temporary account that is created in case where an organization has an error that cannot tell, or where you don't know the alternative account. So this suspense account is a temporary account. It's a temporary account. And we are saying a suspense account is used in two cases. One, where the trial balance fails to balance. And then this can also be used where we can't tell the alternative account. Where we can't tell the alternative account. I'll give you an example. If it is a transaction like this, in case maybe you had a transaction here, maybe it was banked takings, and you can't understand the double entry. Maybe you only know that bank is involved, but you don't know what other alternative account is involved. Maybe you don't understand the word takings. You can go ahead to record this value in the suspense account, in a temporary account. You get it? Which at the end of the day, you have to make sure you clear when you find out the name of the alternative account, or when you're able to correct your trial balance. You get it? So it's good for you to know what a suspense account is. So once you've introduced a suspense account, it doesn't end there. Yes, your trial balance will look good, but you have this suspense. When your auditors visit your premises and find a suspense account in your books, that is a question mark on your books. It is like you're trying to keep some information that they are not aware of. You get it? So it's very important for us to know that every time we introduce a suspense account, it should basically be a temporary account. Now, it's also important for us to know that when we are correcting errors, we do the reverse of what we would have done. I want to give you an example here. Errors is one of those questions that you can get full marks if you understand how everything is really done. And there are several questions that you can also find when it comes to correction of errors. These you can really find them on the iSPAR website in your student account. And then you can really try out several of them. Okay. I've gotten my question. Okay. So just try to take a note. This is question. It is question. It is in May 2019. So note down in your book, May 2019. Question 5. May 2019. Question 5. Okay. So the first question here says, part A says, explain the qualitative statistics that enhance the usefulness of financial information. Explain the qualitative statistics that enhance the usefulness of financial information. Now, you must be knowing this, especially if you've been following the classes. This was one of the things that we talked about in the first classes. You get it? So if in case you cannot know, please make sure that you go back and read. You get it? You remember times when you talked about things like relevance, faithful representation, consistency and comparability, verifiability, timeliness, understandability, and so on. You should be able to go back and you should be able to go back and try to read. So somebody says, I thought the transposition error does not affect the trial balance. Now, the transposition error, I actually gave you an example. The transposition error affects the trial balance in cases where the transposition has been made on only one account. For example, I think you've seen, we have 1860 here, and we went ahead and wrote 1680. So in this case, this error will affect the trial balance because what you've recorded on the credit side is totally different from what you've recorded on the debit side. But just in case you transposed from the way picking the transaction, now it changes from it being a transposition error to being something like an error of original entry or sort of. So yes, somebody can also call it transposition error, maybe where you record 1860, but we know very well the right value is 1680. But you take the same figure in here. Now that error will be an error of original entry. You get it? That will be an error of original entry where you've had you've messed up the two accounts, both the two accounts at a go. You get it? So it's great for us to understand. So once we've looked at the qualitative statistics that you should be knowing, we move to part B that says the accounting clerk of Molly Traders extracted a trial balance as at 31st December 2018, but it failed to agree with the debits being more than credits by how much? 22,410,000. On further scrutiny, the following errors were also discovered. On further scrutiny, the following errors were discovered. So we can see that they are giving us what exactly happened. So it means if the other is our trial balance, just like the way we have our trial balance here, it means that this and this failed to balance by that value they have given us. Now, I earlier said that the side that is less than the other is the side that has a suspense account. So they're saying it failed to agree with the debits being more than the credit. So it means that we introduced this value in suspense on the credit side of our trial balance. So if this was our trial balance, we went ahead and introduced a value here to make sure that our two sides balance. You get it? So it's important for you to interpret that statement because it's going to affect how you're going to do this question. Okay. So once we've gotten that, you come back here. Now, the first thing they are saying that repairs of machinery, okay, on further scrutiny, the following errors were discovered. Now, the first error is repairs of machinery, shillings 4.5 had been charged to the machinery account. Repairs of machinery, 4.5 had been charged to the machinery account. Now, right now, we should be knowing the double entry, even before you look at where it has been charged. If somebody says repair of machinery worth 4.5, you know very well that repairs should be charged to the repairs account. Repairs should be charged to the repairs account because repairs are expenses. So they should be charged to the repair expenses account, not the asset account. We only charge to the asset account when we are buying a new asset or we are disposing of the asset. You get it? So if this accountant went ahead and recorded repairs of machinery in the asset account, rather than opening up a repairs of machinery account, then this error is an error of principle. Remember what we said with error of principle? It is an interchange between the asset account and the expense account. It's just basically you've done the right posting on, let's say on the debit side, but you've interchanged the accounts. You've posted it in the wrong account. You get it? So it's very important for us to understand that. Now, how we correct errors is we do the right thing. One, we correct the error that has been made. We correct the error that has been made and do the right thing. You get it? Basically, we reverse out the error and then do the right thing. Now, when you move down, it's good for you to also know what is the question requiring us to do. The question was requiring us to prepare journal entries necessary to correct the above errors. Prepare journal entries necessary to correct the above errors. And then also they're asking us to prepare a suspense account that is fully and duly balanced off. Prepare a suspense account that is fully and duly balanced off. The reason why they are saying it is duly balanced off is because a suspense account is a temporary account. It doesn't remain in our books. So we have to balance it off. You get it? So it's very important for you to have that in mind. So what you basically do is so this is question 5, May 2019. So part A of this question is asking us to journalize the transaction. You get it? And journalizing the transaction, we shall have maybe detail or account. And then we shall have a debit. And a credit like that. A journal somehow looks familiar with the trial balance, but they are totally different things. And for it, it can also have a folio, maybe, and it can also have a narration. We are going to see how it would look like. So And then part B is asking us to draw up our suspense account that is duly balanced off. So a suspense account is just like the way you have a ledger. So we are going to draw up a ledger for suspense. We are going to draw up a ledger for suspense. So this is our suspense account. Somebody might be wondering, why have we started with an examination questions? It reminds me a time when I was learning driving. I went to a driving school and I thought they would start me from the pitch. But immediately I cleared the money for the driving school. The first thing we did, the driving school offices were near a road. So we got onto the road. So it's the same thing that we are doing here. We are onto the road. We are diving into the exam. How does the exam look like according to what we are studying? You get it, eh? And that's why it is also important that even as you revise for this paper, you have to have question papers alongside you. You get it, eh? To make sure that you're not only just reading the notes, but also seeing how the exam looks like. You get it, eh? So it's pretty very, very important for you to have that in mind. I've shared the question that we are doing via chat. I also maybe just to comment, I usually have revision classes during Tuesdays. These revision classes had made them for people who are basically on revision. But I also realized that some of you join in, so it interests you. So I would want to, since we've now done with the introduction, so I'll be having these discussions. You can join in. I'll make sure that I have in mind that at least you also part. So if you have some time, you can join in. If you don't have time, it's definitely also okay. It's understandable. You get, but if you have some time, you can join in. I always share the link with you so you can join in and learn and see. In the revision classes, what we basically do, we do revision and answer. We do question and answer. We don't go into much detail. Though sometimes I go into detail, definitely also. So once in a while, you can come in, and if in case you have another colliding maybe program, you don't have to worry. We'll go through this over and over, and then we can also be able to give you you can be able to access the recording where we record it. You get it. Sometimes we do record those. So I just felt I should clarify that. Yeah. Now, the reason why I drew up this here, and I also came and draw up here, is that's how you do it in the exam, to save time, so that every transaction you record in you journalize here, you should be able to record its impact also in the suspense account as well. You get it, eh? Yeah, so it's important for you too. So we are going to see our first transaction that is saying repairs of machinery, shillings 4.5 had been charged to the machinery account. Now, even before that, within your suspense account, since they have told you that it failed to agree with debits being more than the credits, it means that we brought our suspense account has now a credit balance of this value. So what you do, you pick that value and go to your suspense account, and then have what we call, you have a balance brought down. A balance brought down. You have a balance brought down of that value of 22 million, that. Now, of course, you can reduce on the degree of precision. It is also fine. but that should be the same thing. You get it? Huh? Even here, you can maybe have a degree of precision in case you feel that that is important for you. Just make sure that you're not recording full zeros. You get it? So once you've taken consideration of the suspense value, you now come and start on your question. Now this question, we say this is an L of principal because they recorded in the machinery account instead of the repairs account. Remember, the repairs account is an expense account and this is an asset account. So what we shall do, first we shall remove it from the machine account. Now, since they charged it to the machinery account, remember machinery is an asset. And so they it is presumed that they actually debited it in the machinery account. So what we are going to do is we are going to credit the machinery account. Reason why we are crediting the machinery account is we are removing this transaction from the machinery account. Remember, it is a debit side, it's a debit in the machinery account. So we are going to credit the machinery account and debit our repairs of machinery account or machinery repair account, whatever you might call it. So this is what is going to happen in your, you're going to have two accounts. You're going to have a machinery account that you're going to credit by how much? By the value that we have. This is 4.5. It's 4.5. So I'll call it, because I've already indicated a degree of precision here of thousands. And then the reason why I'm crediting here, like I've said, it was charged to this account. So I'm crediting this account to remove it from there. You get it? Somebody will say, why are you assuming that it was debited there? The fact they are saying that it was charged to the machinery account is idea the machinery account has a debit balance. So ideally it was charged to the machinery account as a debit. And then I'll put this into the repairs account. For 500. Then you can have a narration. You can have a narration. You can have a narration. Just a moment. I want to show you how a narration would be. Okay. Maybe this can be. Actually, let me just merge these cells. Being correction of error for maybe error of principle in case you've understood the error. In case you've not understood the error, the type of error, don't record it there. Being error, being correction of error of principle for posting to machinery account instead of repairs account. So that is just yeah, that is just could be a narration. Sometimes we have what we call narrations when we are doing correction of errors, but in most cases, sometimes they say that in the question they'll say ignore narrations. Did this one say ignore narrations? I think you can see they said ignore narrations, so we don't read the narrations. But in case they were silent, you can go ahead to include them there. You get it, huh? Narration is just Ruzungu, just English, nothing very much. You get it? So that's how the narration would be. You get it, huh? Somebody asks debits being more than credits. Why is it on the debit side suspense? Now I want to get back to here. Remember in our trial balance here, this learning question we were doing before this came through, we say that if one side is more than the other side, for example, here the credit side was more than the debit side, what would happen is would get the total and put the suspense on the side that is less than the other. So our suspense value would be there. Let me just try to get the difference between these two things, which is 9820. So I would include it there. So when I include my suspense value here, these two values will now balance. That is what happens. Now, for matters of our question here, they said that repairs, okay, sorry, before that, they said it failed to agree with debits being more than credits by this value. So it means that we introduced this value on which side? On the credit side, because the credit side was less than, because they're saying debits were more than credit. So you cannot introduce it again on the debit side. And that is why we picked this value and took it into our suspense account. We took it in our suspense account and we recorded it on the credit side. We took it in our suspense account and recorded it on the credit side. There. Because it's the credit side that was less than the other. You get it? Huh? So it's important for you to understand. You'll understand this more when you practice more questions. So you shouldn't have to worry much. So they told us to ignore narrations. I'll just ignore my narrations there. So this is the first error. I'll come to my second error. So the second error, they are telling me the sales journal had been undercast by 6.5 million. The sales journal had been undercast by 6.5 million. Now, when they say the word sales journal, what comes to your mind? What comes to my mind here is that the sales journal is a book of prime entry or book of original entry. So it means that this error was made at a point in time, even before we would move to the ledgers. So it is an error of original entry. You get it? The sales journal had been undercast by 6.5. You get it? If you remember very well our accounting process, we said that you move from books of prime entry. You get to, now under books of prime entry, this is where you have the journals. Then you move to the ledgers. Then you move to the trial balance and so on. So this error means it was actually done at this point in time when we are transferring transaction from the books of prime entry to here. You get it? Now, when somebody speaks of a sales journal, sales journals record what we call, credit sales. You get it? They record what we call credit sales. Now, it's very important that if you're attending this class or any of my classes, that you write some of these things. Some of these things, you will not find them in the handout. You get it? Because there's a lot, we cannot put everything to a handout, and that's why we have these classes. So some of these things I keep talking them, but they are very important and you interface, just like the way the accounting process. I may have talked about it and some people took it for granted and did not anything. You get it? So if you have a sales journal, when you see a sales journal, means that it records credit sales. Now, when you're moving transactions from the sales journal, you move them to two accounts. You have two accounts that you move. Remember, a sales journal is just a single column kind of book or a single column account. So what happens when we are moving transactions here to move them to the ledgers? If it's a sales journal, we shall have two accounts. We shall have the sales account itself. We shall have the sales account. And then we shall also have what we call the debtors account or accounts receivable, like that. So it means that if the error was made at the sales journal level, where we undercast by how much? We undercast by 6.5. It means that even the values we transferred into each of these accounts were less by 6.5. Remember, the error was made at this level. So it means that even transferring these values to these accounts, we transferred less by 6.5. We also took the same value to our trial balance with a less of 6.5. Remember, if we are removing values from the sales journal, we come and credit our sales. Remember, sales, when sales are increasing, we credit them. When debtors are increasing, debtors are accounts receivable. These are current assets. And when assets are increasing, we debit them. So these are debited. Now, if a transaction was picked from, the error was made at this level, it's an error of original entry. And they're telling us that the question is telling us that sales journal had been undercast by 6.5. That would mean that we took less 6.5 and also the same thing here. So what would mean is if we want to correct this error, we shall come and since it was undercast, it means we have to increase it. So we took a lower figure. So we can only correct this error by increasing it. So we shall go ahead to credit by 6.5. And we shall also credit by 6.5. The reason why we are crediting sales and debiting our debtors is because we are increasing on what they had undercast. The word undercast means they recorded a lower figure than by that value that you have given us. You get it? So it means that since it was at this level, it means that even at this level, this is what happened. So this is how we would correct this error. Would basically go ahead to credit our sales by 6.5 and debit our debtors by 6.5. That is how we would correct this error. And it's because it was a kind of undercast. You get it? Just give me a few minutes. We should be able to close in the next few minutes. Please, in case they have called you for supper and you're worried, I'm going to finish this. I just wanted to give you the principle. So we'll have our sales account. It doesn't matter what you start with, either debit or credit. And then we shall have our debtors account, or what somebody can call accounts receivable. So they said 6.5. So we are crediting this by 6.5 and debiting this by 6.5. Now you see these two errors. that we are correcting, the first one and the second one, both these errors don't affect the trial balance. This was an error of principle. And we say that the error of principle here does not affect our trial balance. This second error that we are looking at is an error of original entry. You can see we said an error of original entry. It is at the book of that book of original entry. So you must know the books of original entries. You get it. It's very important for you to have that in mind. So that is how we would correct this error. You get it? I will try out with one more error so you can know. Now, here they are saying purchase of a motor vehicle, shillings 15 million was entered in the purchases account. Purchase of a motor vehicle, shillings 15 million was entered in the purchases account. Now, when we purchase a motor vehicle, we should record it in the motor vehicle account. The word purchases or purchases account, this account records only raw materials or goods for resale. Something called purchases, when you sit in accounting anywhere, purchases account, yes, you can purchase, by English, you can purchase a motor vehicle. But in accounting, the purchases only records goods for resale or goods that are going to be used in the transformation or production. You get it? So if this accountant recorded this 15 million in the purchases account, that was an error. And this is also an error of principle. You get it? So what we have to do is remove this value from the purchases account. Remember, purchases have a normal debit balance. Purchases are like expenses. Purchases have a normal debit balance. So if this 15 million was entered in the purchases account, what we shall do is credit our purchases account to remove this 15 million that is sitting in the purchases account, and we shall go ahead to debit our motor vehicle. Why we debit our motor vehicle is because that is where it is supposed to be. It is supposed to be recorded in the motor vehicle account. You get it? So that is what we are basically doing with our error. We are saying that remove it from the other account, which it is sitting in, the purchases account. And this is 15 million. Sorry, we are crediting this. And make sure that you put it in the right account, which is the motor vehicle account of 15,000. And you've corrected that error. You get it? You just basically correcting what was done wrongly and putting things in the right account. The same thing we did with the machinery account. We removed this value from the machinery account because it was repairs and put it under our repairs account. This was an error of original entry where the value that was taken to the sales and debtors account was undercut by 6.5. So we are adding on the existing figures. That is why we are crediting our sales and debiting that. As simple as that. You get it? We will try out more as we proceed, but just for you to understand. In case you're brave enough and you have some time, you can go through this question and try out by yourself, and you can share your solution in the WhatsApp group. I usually don't see a lot of interactions apart from hi, hey on the WhatsApp group. I hope to see questions, especially for the things that we've studied. Can you go an extra mile to look out for some of the questions and try out and ask? Guys, you're paying your money. You should utilize all the time you have. And I told you earlier on that accounting, we shouldn't strive for 50 marks. Strive for a 90, strive for an 80 at least. You get it? This paper should appear on your transcript as the first paper, and you should make sure that it gives the right first impression. You get it? So it's very important for you to understand that. Are we together? Yeah. So, okay. So let's make sure that we are doing that. So I wanted just to give you an insight onto that. Basically, today we've learned at least how to prepare. We've been able to learn how to get values from the ledgers and post them into our trial balance. And then we've gone ahead to also learn about errors and also how the suspense account comes in. You get it? Huh? Yeah, so we'll end here for today, and we'll see how we can proceed from there. Please try out the questions. There are several questions that you'll find, especially for the topics that we've done earlier on. You get it? Huh? Especially when it comes to double entry. If you have, okay, sample us on how to transfer them to the suspense account. Now, I wish to say that it is only those errors that affect the trial balance that would be corrected through the suspense account. It's only those errors. I'm going to sample you on one of the error. Can I do this? Okay. Yeah, I can use this. This as a credit note. Would it confuse you? Let me see if there's anything direct here. Okay. Okay, they are saying, I have ignored this for a reason. This one, they are saying that, share the question on WhatsApp. This one, they are saying payments of this to Mwamba, a supplier, was properly recorded in Mwamba's account, but wrongly recorded in the cash book as this. Now, this is an error of these are two errors, by the way. We have a transposition. I think you see how the 8 has been moved here. So we have a transposition here. And then, of course, yeah, basically we actually have a transposition. So they are saying it was recorded, a supplier, okay, it was to Mwamba, a supplier was properly recorded in Mwamba's account. So in Mwamba's account, it is rightly, but was wrongly recorded in the cash book as this. It was wrongly recorded. Now, since this is an error of transposition, remember, we said that errors of transposition affect the trial balance. Now, how would we correct such an error? What we do basically, any account that they are saying was correct, we close our eyes on that one, and we only correct this that was recorded in the cash book as this. So what we do is the cash book, we recorded a lower value. We recorded a lower value. So you basically get the difference between this and this. You basically get the difference between this and this. You get it? Let's just try to get this value. So we have that value. That was what was recorded. And then we have this value. So the difference between these two values, this and this, is 90,000. So it means that we recorded less by 90,000. So when you come to your question here, now this error affects the trial balance, and that means that it is part of this value that was put in the suspense account. It means that it is part of this value that was put in the suspense account. So what would mean, how we shall correct this error, error 4, is since in the cash book we recorded a lower figure, because that is what the error is saying. In the cash book, we recorded this lower figure, this by 90,000. Now, a payment to Mwamba, when we pay to Mwamba, we credit our cash book. When we pay to Mwamba, we credit our cash book. So how we shall correct this error is we shall come here and credit our cash book, or call it the cash account. We are crediting by 90,000 to increase on the value that we wrote there, to increase on this seven that was recorded. So we are crediting more by 90,000 to take care of that. And the alternative account that we shall debit is the suspense account. Reason why we debit the suspense account is that the question itself has told us clearly that the other account was properly recorded. It was properly recorded, it was properly recorded in Mwamba's account. So it means that this error is corrected by suspense account. So once you've done this, debited cash, credited cash and debited suspense here, you come to your suspense account. Since we are debiting suspense, you just come and write cash 90,000, like that. Cash 90,000, like that. So that is how you bring items into the suspense account. But we shall go more details in this. I would like to end here because of time, and leave you. You can go through the question for your learning as well. Remember, you can also find solutions for these questions on the iSPAR website. They are readily available there. So when you try out a question alone, even before maybe you ask questions, yours is to look at, you can look at the solution and see what was the solution for this period. And then from the solution, maybe there's something that you didn't know that the solution will reveal to you. And maybe when you need more clarifications, then you can be able to come and post on the WhatsApp group and see what other members say about the question. Then if all the members fail, then I'll come in and be able to support you accordingly. You get it? Yes, so thank you so much for being part of this. This is Samuel Ivanda. In case you are watching this as a replay and maybe you've not subscribed for our class, make sure that you reach out to us and make sure that you access all the other classes for all the other topics. So thank you so much, and wish you all the best.